Good evening, listeners. Today I want to give us a quick breakdown of the forex chart from the monthly time frame to the 4-hour time frame using a currency pair. Here I am using GB Euro USD, as you can see here. This is my chart. It's in the monthly time frame. You can see my M here, monthly time frame. I have drawn my levels. And this is a chart pattern. The next thing to do is to understand where the price is going. This is the current position of the price. Where is the price going? What is the market doing? If you have read a lot about chart patterns, you will see that there's a pattern that this monthly time frame has already formed, which is a W pattern. A dip, a retracement, which is a neckline, and a long. The W pattern normally completes from where it actually started. This is where the W pattern started. Down to this position, it is expected to either hit this key level or stop at this position where the fair value gap is closed. That is one way to determine the direction of this trade. Another way, looking at this position, you will see a retracement, a deep retracement, and a move up in the upward direction. But that's not my major point. Look at this particular position. You will see a bullish move, a strong retracement, a doji candlestick, and a bullish move. Like I said, if you have read a lot about chart patterns, candlestick patterns, now the first one is chart patterns. This is candlestick patterns. If you read a lot about candlestick patterns, you would have read about one of the candlestick reversal patterns known as the morning star. The morning star, we have the morning star and we have the morning doji star. This pattern here is the morning doji star. A bullish movement, a doji candlestick formed on the key level, and another bullish movement. In creation of these bullish movements, when this bullish movement occurred, it created a fair value gap, which is from this point to this point. On getting to this point, it reversed and closed the fair value gap. That is why it stopped here. In case you're trying to understand what fair value gap is one of the concepts in a method of trading known as a smart money concept. So I'm actually combining two trading principles here. Now, it came back and closed the fair value gap. After the closure of the fair value gap, the next thing expected for this trade to do is to further move to the upside. And in moving to the upside, this is the next key level. So this trade is actually expected after it has closed this fair value. Of course, it has already started moving up to get to this next key level. So this is the monthly time frame. Once you have done that analysis, the next thing to do is to go straight to your 4-hour time frame. And just as you can see here, now I'm in my 4-hour time frame. That is where you do your final analysis. This trade is, just as you can remember, in the monthly time frame, it was coming down, retracing. But let's look at this 4-hour time frame. This is a W pattern. You can remember what I told you about W pattern. It made a move, a move downward, upward, down. Forget about all this stuff. This is a W pattern. The expectation is that this trade will start going up, just like you saw in the monthly time frame. But let's look at something here. Can you see this? This is a doji candlestick. This is a bearish sign, a doji candlestick, an impulsive move. This impulsive move created a fair value gap. You can see we still have the fair value gap here. That is why you have this trade coming down. So it is expected that this trade comes to this position, closes this fair value gap. After closing the fair value gap, it goes up. Now, it is in this 4-hour time frame that you're supposed to place your stop loss. Once the fair value gap is closed, you go to the bottom of this position where you have these two strong rejections. Go below it, place your stop loss, and then go long. Going long simply means you go in the bullish direction. And that is how this trade is. So let me make this analysis for Euro USD today. Have a wonderful and lovely evening. God bless you.